and I just realized that I hadn't quite clicked in YouTube yet. So good morning and welcome. It is the 14th of July 2026, and it's a big day of celebration in France. I think they call it Bastille Day. I would be surprised if the French are working today, so they probably won't even be here. Let's have a look. French bank holiday. Well, of course. It would have to be. French banks will be closed in observance of National Day. Well, knock yourself out. And today we got some core CPI numbers. Otherwise, not a lot. And Donald Trump saying that we will hit Iran hard tonight and tomorrow. So Donald Trump said, we had a deal yesterday. They break deals. Iranians are extremely unreliable. I wonder if that had anything to do with you dropping bombs on their head. Well, that is just me hazarding, I guess. So what do we got? Well, we got 36 degrees in my office, for starters. We also got the DAX once again sliding below 25,000. So looking at the daily chart, I think I can get rid of this now. That's surely not going to be received well. Attempting to starve off further declines failed yesterday. And overnight, the DAX has fallen. The overnight ranges are getting bigger and bigger. Okay, so we got 2 minutes to go, and I would like to trade the espresso. I'm just going to check if there's any messages for me. Somebody just saying, please don't tell us what you're wearing. I'm wearing decent attire. A white t-shirt, underwear, shorts, no socks. We're all good. Nothing offensive here. And since I'm not going to be doing what karaoke Andy does, which is going on camera, not that brave. Oh my God. 1 minute to go. And some 30 seconds to go. I'll place a buy order here. Currently trading at 70. We're getting lower and lower. 60, 50. It's almost impossible to actually place the espresso short. So the low was 65, which means that the sell will come in at around 48. I'm going to make a note of that there. That is the problem when you are when you, for example, in a strong market or a weak market, and you're trying to place the espresso order, but the market keeps moving right up until the final seconds and settling at the extreme end of that final 5-minute bar. So accordingly, you try to do your best. School run is in 30 minutes. Espresso could be filled, well, now. My stop loss is at 24,983. So this is a school. Oh, come on, get your brain in gear. This is an espresso long, which is measured against the opening range. Well, actually, the range just before the open. This range here. And then adding 18 points. Just trying this trailing stop thing. So the stop keeps moving. Do you see that? It's trailing the existing price. Stopped out for plus 20. I just wanted to try it. Stopped out by trailing stop loss for plus 20. It's probably a little annoying now because it keeps moving higher, but I really wanted to try it. So on the software, enable trail, it basically moves the stop loss so that the market can't go 10 points against you. And well, it worked really well, but I got stopped out way too soon. So auto break even after points, that was something I can also consider. All right, cool. Well, at least we tried it. Yeah, now I'm definitely beginning to regret that I tested this, because now this was an almost 100-pointer going up to the top end of the trading range. That is not at all my style, to just take 20 points. I hope that some of you had the good sense of oh, I got some people that are still in the DAX. I'm proud of you. Well done. In fairness to me, what I thought I did when what I thought I, where is the, what I thought I did, that when I enabled trail, auto trailing point, I thought that it was from the initiation of the position to where it was right now, and that would have meant a buffer of about 20 points. Instead, because I wrote 10, it moved the stop loss right up to the point where the price were minus 10 points, and that was not really my intention. But hey, lesson learned, and it could have been worse. So that's a very strong first 10-minute candle. If we use a little bit of wizardry. And so if I show you something, if I filter for Tuesdays where we are in a gap down situation, but the first 10-minute bar is positive, what we're looking for are really strong first bar closes. So here it looks like a second bar 50% retrace, push higher, another retrace, and then a third wave up. And here, similar story actually, remarkably similar. Just another gap down, another leg up. So I think, just sort of based on the early evidence, what we may want to consider are we may want to consider being buyers down in the area around 933. So I'm just going to put that out there. I'm going to delete this and this. If I move us over to a 1 minute chart, just want to check something. So we're looking at yesterday's trading behavior. The retracements were about 45 points. So I want to be a buyer. So if we could somehow be buyers around 970, that could also work out. I don't know if I'm going to get that opportunity. I'm going to do something I don't normally do. I'm buying at market in about 1/10 of the size, and I will reserve the right to add more to it at 70. So normal my stake size is 30, but I just cut it down to 5, just on the off chance that we are retracing down to 70. That is my attempt of just scaling in. Otherwise, if I don't, I'm just going to whack it back to full size. See, I got two areas that I think are interesting, 970 and 933. 933 because it's the halfway house, 50%. Don't have to reinvent the vocabulary, Tom HOUGAARD. And 970, which kind of just got, you sort of get this sense of David Paul reaching out to us from beyond saying, don't be a dick for a tick, Tom. So just so we are clear, in case anybody's watching this video in the aftermath, I normally trade 30. I decided to scale my size right down and just buy at market because I didn't get my 970. And the idea that I had was, okay, I'll buy right now, which was at the time 89.4. And then if it gets to 970, which is the price I would really like to get, then I'll buy more. Now that's adding to a loser, true. And as I just said, I don't like doing that. I wouldn't trade normal size randomly and then double up. So I scaled my size right down and bought, I guess what's essentially 1/6. What is 1/6 expressed as a percentage? It must be 16 2/3, right? 16. 6 times 16 is 96. So then there's 4 in the residual. So yeah, it must be 4 6 is 2/3. The benefit of having a sibling who is drilling you on tables as a young child. You know, what is emerging now is a story of a market that was initially able to find some dynamite, but on the second bar is falling quite short in the energy department. No build up above bar 1 high on the 10-minute. I like the 10-minute from time to time to sort of gauge momentum. But, you know, we're 1 minute to go. Let's see. It could be that we are looking. I'm going to show you some charts. We may have this kind of scenario. Could be bar 2 is this is 10-minute. Bar 2 is somewhat of an inside bar. And then we get the build up on 3, 4, and 5 on a 10-minute. We'll park that. All right, so I'll reset the filters now, because what I now got is I got a gap down. I got a gap down situation on a Tuesday where the first 10-minute bar is very positive, but the second 10-minute bar is negative, and it's also an inside bar. And so now all of a sudden you're getting a significant reduction in observations. Again, showing them here on a 10-minute chart. So over the last 8 years, you only have 13 observations of this. So what's the bias? Let's look at the bias. Is it up or is it down? Well, here it's up and sideways, up and sideways. Reversal. So what we need to be mindful of is, are we trading below and closing below the halfway point. Okay, so let's keep that in mind. Up and sideways. Whoo! That is an unpleasant day to trade, isn't it? Back in 2022. What did I do on the 19th of July 2022? I was wishing my life away trading the DAX in an obscenely boring trading range. Still, maybe I was short. So we had a bias of up in the first few instances, and now it seems the bias is down. But it much depends on where the 10-minute bar actually closes. But what we don't want to see is the DAX begin to trade below and close below the 10-minute. Yeah. Yes, it's like it's a puzzle, isn't it? You're probably keeping an eye on the FTSE as well, as am I. Dare I add to it, ladies and gentlemen? Haven't quite got that momentum that I'm perhaps seeking. Let's look at the 15-minute bar school run with 5 minutes to go. Right now, absolutely technically, the second 15-minute bar is an inside bar, right up against an overnight range high. And FTSE is well on his way to We have a gap down situation on the Tuesday in the FTSE where the first 15-minute bar is positive, but the second 15-minute bar is negative, and that second 15-minute bar seemingly is also an inside bar. So we got 12 sessions like that. I want to see if any of them are causing a real trending market. No. Nope. Nope. Oh, sorry, I could show you as well. Let's start from the beginning. Okay, here we go. So these are Tuesdays, first bar positive, second bar negative, 15-minute bar, which will conclude in a few minutes. Sideways, up, sideways, down, sideways, up, up, sideways. Now there's one that could be interesting. But that break comes at a lot higher level. But what could be happening is 9, 10, and 11. Or this. Or this. Okay, interesting. I'm gently adding a little bit smaller size right at the top of the trading range whilst keeping an eye on the FTSE. Let's see if we can actually get a rather bullish looking 10-minute chart. Or you can look at a 5-minute chart as well. It's just then 10-minute bar got a little bit more credibility. We got 1 minute left. I don't know why I'm trading 5. I don't want to be right in small size. I want to be right in big size. Of course, there's also the chance that the FTSE is simply defining an early trading range behavior. Yeah. So here we go. In the DAX, we certainly also got trading range behavior. We got a big push bar 1. Bar 2, unfortunately, on the 5, is defining a trading range behavior on 3, 4, 5, 6, and 7. On the 15-minute chart, my friends, we have a high at 25.015. So let me show you the school run long entry. That's that bar that you see there. Stand by in the FTSE, please. Small size or big size, I really don't like just sitting with positions that are not doing me anything. I think I'll close my DAX and then wait for a proper break. It feels like I'm stuck in an inside range. So we have a sell signal now triggering at 104.53, 54. I'm shorting the FTSE here at 104.52.2 on what's called a first bar positive. Stop loss is 30 points, but if we trade above 104.68, then I don't think this is going to work. DAX seems to be reluctant to give up the ghost of a breakout, but isn't able to get momentum going above 25,000. That 24,970 is not just the low of bar 2, but it's also the size of the morning retracements from yesterday. So that bar we can call bar 3 had a range of 16 points. It means anybody selling below bar 3 low with placing a stop loss above, they could have a 2-to-1 ratio on their gain. 16 twice, 32. That's what we just hit here. And so now, don't know if you noticed it yesterday, but there was a lady called Beate who trades in here. She pointed it out to me. And so 3R would be down here at the lows. So maybe we can expect another 16. DAX is still not giving up the ghost. Beate, are you in here today? Somebody found what I did the 21st of July. On that day, I lost 20 on the FTSE. I made 51 on the DAX and 18 on the Dow. Thanks, Matt. Appreciate it. Hi, Beate. Are you short from bar 3 in the FTSE? All right. Ronnie, I think I already mentioned that there's a... All right, Beate is short from bar 7. So let's look at bar 7. Well, we'll see. Oh, brilliant. Nice work, Beate. I'm wondering if we should be short the DAX. We just almost triggered the school run long area. Do you see that? At 59. Stand by. I'm adding to my FTSE position at 47. I'm shorting the DAX here on a school run short. Are we going to get 31? Come on. I'm closing my add-on for 10 points. I'm moving my stop loss to break even in the DAX. I'm closing my FTSE. FTSE closed. I'm closing most of my DAX. Here's the reason. I really wanted to have a bit of a shorter morning session because I got some errands to do, and because I streamed for as many hours as I did yesterday, that would really help me out. So closed of DAX short. I will stop streaming now. This FTSE profit warmed nicely, and this will free up time to get my admin but hey, we don't have to just do it just yet. Would you like to ask me some questions? Then I think we should just do some questions. Because you don't have to do it just, why don't you type a question if you have any, and then I will be back with you in 5 minutes, okay? Just give me 5 minutes to brew a cup of herbal, stuff. Hi. Okay, so let's look at the situation. Seems as if that was not the worst decision in the world to exit the FTSE where we did. My exit in the FTSE was 37. Ooh, and that was on the add-on, and 29. So there you go. And the DAX, well, got stopped out at break even on that little bit that was left. So, the first question I have is, where do I ask questions? So, good morning, Tom. I recently find you and impressed by all the content. I'm a student of Fabio. That must be the Italian trader. Give my regards to Fabio. I've been trying to get profitable for the last 10 years. It has been a difficult journey. Yes, this is not an easy game. So let me post his message. Well, first of all, I know Fabio, and he's a great guy. I'm sure he can teach you. Do you take students on, or do you teach one-to-one? I'm afraid I don't do things like that. It is just not something that I am interested in. Where can I find your strategy? Okay, so the strategy point of view is you want that. Go to my Telegram channel called Resource Channel. You should have been sent a link on how to join it. So here we go. There we go. All right. Good luck, Mo. Okay. A guy called Crash Kit. Is that his name? Yeah. Okay. This is a more personal question, but you know what? That's fine. Let's do it. Hey Tom, taking the chance to ask this question. Keep the motivation. High is a really difficult thing in trading. High. Oh, okay. Maybe context will become clear. Ever had a point in your life when you thought about stopping trading, either due to a failure or other missions in life? Okay, so that was the first question. So we'll deal with that. How did you pull yourself out of a potential valley? Okay, another question. Good. Or how would you, if it ever would happen to you? Thanks for everything you do. Okay, so that's some questions that, you know, I actually don't think that was his latest question. His latest question was something about my account balance. Okay, so the same guy is, hi Tom, sorry if I may have missed this in today's session, but would you mind bridging the gap in your account balance against Friday close? Did you withdraw? No, I didn't. I went long Friday night expecting a push higher on Sunday, and as you know, that didn't happen. So I lost on a weekend position. I think I should probably reduce the font size a little bit on this. So there you go. So that's the crash kit. So that was that. Crash kit, are you still interested in me answering the rest or not? Yeah, okay. Have I had points in my life where I found that it was necessary to stop trading? Let's see. Yes, but perhaps not for the reason that you might associate. I didn't stop because things weren't going well per se, but the first time I stopped was not long after I had left the trading job in London, or on the trading floor. And let's just be clear here, I didn't leave. I was made redundant because the company that I worked for was a company called City Index, great company, but unfortunately had misappropriated their they were at risk of breaching the banking covenant because they had taken on clients who were betting bullishly on the Spanish property market. And if you have any idea what happened to Spanish property shares, you'll know that that was not a pretty story. And for a long time after the crisis in 2007-8, the Spanish housing market was in absolute shambles, with half-empty building projects, half-completed building projects scattering the landscape wherever you drove. It was actually quite unsightly, it must be said. So when I was made redundant, I decided to trade for myself. But I very quickly, within 6 to 9 months, realized that how I had traded as part of an organization wasn't cutting it anymore. It didn't work for me. And I decided to stop trading for a while to, shall we say, get my head straight. And I think that's an incredibly powerful message to send to you all, is that just because we don't get what we want at the pace by which we want it doesn't mean that, if you're religious, God's delay is not God's denial. Now, perhaps that I'm not the most religious of people, but there's something very beautiful in that saying, God's delay is not God's denial, that even such a heathen like myself can get on board on. So if you are struggling to perhaps make the kind of gains that you know that you are capable of, and that is the crash kit, that's the heart of the matter. I was absolutely mindful that I had the skills, but I wasn't able to act upon the knowledge that I had. And if you are there, and I think that's probably where the majority of you are, it isn't that you don't know some great setups and some great techniques in trading, is that it is the mind that gets the better of you by being impatient, by not accepting that today's just going to be a losing day, and then you just walk away and say, oh well, that didn't work out today. Instead, we battle on because we don't like losing and our ego is bruised. And it's not even I'm not turning this into a Freudian circus where I somehow explain every nook and crook within our our weird and beautiful mind, but just accepting that, out of 5 trading days, you're probably going to lose on 2 of them, maybe even 3. But you can still make it a profitable business. But I think that's a very difficult fact for people to absorb. And so perhaps that time away should be spent on accepting that losses occur and then trade at a trading size that can make them not bruising for your sense of self and your sense of identity. So that was the first time that I took some meaningful time away. There's been a couple of more times where, for example, in summer holidays, where I haven't traded with you, where I have seen it as a welcome break, where I have spent time on researching other techniques, other traders, their approach. So the previous question was about Fabio, so I looked at Fabio's scalping techniques. So because why wouldn't I? Because I respect Fabio, I respect Al Brooks, I respect Tim, either of them, both of them. In fact, I would say that Tim Fairweather, he, within the Al Brooks trading community, he inspired me to look at. I coined the phrase situational analysis a long time ago. I was the first one in 2000 ever to talk about that if Friday wasn't able to penetrate the highs of Thursday, then Monday with high probability would be would trade down to whatever lows were on Friday. So I'd like to take that credit as the first in the world to coin the phrase situational analysis. But it was someone like Tim Fairweather that inspired me to be more electronic about it. And so, I'm inspired by the Tims, by Al, by Brad. Brad has an incredibly clinically dry approach to price action that, some like it, some don't. But I don't try and gauge it as whether I like something or dislike something. It's just, is there something here that I can learn? And then there's Rose, who's got another angle to price action, which is perhaps more rooted in how professionals would trade. At least that's how she is narrating it. And so I think when I take some time away, I take that time away to sort of perhaps reflect on the deeper meaning of myself and my relation to trading. Because I like to think that I will carry on trading for a long time, and so trading has to be fun and it has to be stimulating to the senses, because otherwise there isn't much point to it. Making money just for the sake of making money is nowhere near as fun as making money while having a great laugh whilst doing so. For example, if I could play squash at a professional level and make as much money as I do in trading, well, wow, that would be amazing, because I absolutely love playing squash, and I love competitive sports. I love competing against another individual in some sort of setting, whether it's chess, backgammon, squash, paddle, you name it. Not because I necessarily want to win per se, but just because I love what competition brings out in us. But there's also been instances where I've been worn out, tired, where I really felt I sleep poorly. I track my sleep, and my REM sleep is poor, my deep sleep is poor, my nutrition is off. I'm more prone to having a Coca-Cola than a spirulina smoothie. And that there are times when, and there's even been times where I have mistakenly gone in and traded with you when I deep down knew I probably shouldn't have. But taking time out because of an enormous loss, no, I haven't had that. But if I was going to give you some guidance, then Crash Kid, without really knowing you, I would probably hazard a guess and say you're probably a very adequately equipped technical analysis trader, or perhaps even better. And if you can't quite bridge that identity of yourself with the results that you're getting, then I would most certainly recommend you taking some time out to reflect on that. But how do you take time out on reflecting on it? I think that's perhaps an even better question. And so if I was going to give you some guidance on that, then what I would recommend is I would review old trades and create a visual representation of them, perhaps via a PowerPoint, and I would come face to face with my old self as part of the training. You know, basically confronting yourself with how your behavior in the past has panned out. Need any further guidance on that crash kit? You just you let me know. Okay. Oh, there's a lot of questions here today. I'm not sure I can get all of them. I did actually. I wasn't joking when I said that I needed some time to do some admin. Mo is saying, where do you ask questions? Mo, where you just type where do I ask questions is where you ask questions. Slavo is saying, hi Tom, you mentioned you trade CFDs, or is it a spread account with Trade Nation? It's the same thing. CFDs, spreads. I don't know if you know this, but it's exactly the same thing. The difference between a CFD, this is a CFD account, but they call it a spread account. So here's the thing. Let me just demonstrate, okay? So here's the DAX. So if I just traded that at 0.5, and let's say that we're trading the FTSE, and we're also trading that at 0.5, okay? Just So I have now executed 2 trades. Germany trades in euros, but the FTSE is trading in pounds. However, my account is set up as a spread account, and I traded in US dollars. So that means that right now I have traded something that is normally traded in euros. I've traded in dollars, and I've traded something that is normally traded in pounds, but I've traded in dollars. And that's the power of a spread account. And it's a really smart way of being able to trade in a currency that suits you without having to worry about FX conversions and the likes. So that's the power of spread. A CFD account. This is not a CFD account. This is it's basically still the same principle as a CFD account. But a CFD account, if I traded the Germany, I would have traded in euros, and I've traded the FTSE, I would have traded in pounds. And let's say that I had a CFD account nominated in dollars. Then once I closed the position at a profit or loss, then whatever euro amount I made or lost, or whatever pound amount that I made or lost, would then be converted back into the base currency. And the reason why I want to avoid that is because brokers generally aren't very favorable with the exchange rate they use from converting, say, from a trading position into the what we call the base currency. So I hope that helps, Slavo. Yeah? All right. Someone called AM. Dear Tom, I'm writing to tell you that I'll stop following you and consult my lawyer. Oh, yes. Well, now this man here does have a point. He's very funny. And one day I'll tell you the story about, obviously he's just making fun of me. But there's this story of me trading live on a stage in Frankfurt, and I shorted the DAX, and there was a German gentleman in the audience that felt it necessary to comment on my trading, saying, "Yeah, Tom, you traded very well, but you made one mistake. Don't short the DAX." And that has stuck with me ever since. All right. Okay, then there's a guy called Bembeke. Let's have a look at Bembeke wants to okay, there is a joke here that is a little bit racy, so I'm just going to delete that. You've probably already seen it, but there you go. Hi Tom, I remember someone asked whether you trade prop firm account or small live account. If you would, or if you would rather. I remember someone asked whether you'd rather trade a prop firm account or a small live account. You said you'd think about an answer later. Did you ever answer that question? I don't think I did. Yes. Okay. Sorry, Bemke, thank you for your patience. How do I feel about prop accounts? I'm going to make this answer short. I don't know yet enough about every single major prop firm to give a really qualified answer. And I say that with some justification, because I have investigated 4, maybe 5 prop firms. And what I have seen, I do not like. For example, there was one company, it was a company called Hantech. And if there's any representatives from Hantech listening to this, you're more than welcome to reach out to me, because I don't want to give you an unfair characterization. But within the Hantech rules, there was a rule that said that your trading allocation between longs and shorts has to be balanced. And of course, since it's their company, they're free to make up the rules entirely as they want. But from a professional's point of view, that is the biggest load of BS you can possibly imagine. Why on earth would you want to have an even allocation? If you are in a raging bear market, why would you feel it necessary to look for long positions just so that you can balance out your executed trade portfolio? That doesn't make any sense whatsoever, and I feel very strongly when I say that that rule to me has the smell of being a design to create an unfair playing field for those who engage. There are other rules that I've come across where I think, okay, fair enough, but that's probably not how a man or a woman that does this for a living would necessarily behave. But the way that these said companies phrase it is that, what we want and what we're looking for is that well-balanced trader. And well, look, they can write whatever they want because they're the ones providing the funding. So to answer your question, I think I would rather have a go at a small account than I would want to necessarily live with the stringent conditions by which people have to operate many of the prop accounts. I hope that answer is satisfying and without being controversial. I've said things that I can back up and substantiate. I haven't, I don't think I've created an unfair characterization of, in this case, Handtech, but if I have, and that is not one of your rules, then I deeply apologize, and of course I will redact that statement. I have to be careful these days, because you don't, for example, yesterday I was talking to a gentleman, and he said, oh, Trade Nation's got a horrible reputation, and they're doing this and they're doing that. And I said, where the hell are you getting that information from? Oh, that's just things I've read online. It's like, well, did it ever occur to you that other spread betting companies and CFD companies are posting crap about each other? Did that ever occur to you? That because the public is so gullible that they'll believe anything. Oh no, I wouldn't want to trade with plus 500 because there's a guy on Reddit that said that he didn't get his payout. Well, could it be that there was a dispute? Could it be that it was posted by someone else? And I think I feel very strongly about that, because you don't really unnecessarily want to shoot down a company that is fully licensed, which it is. Trade Nation is bloody fully licensed. It has a Portuguese license, it has a Bahamas license, it has a Seychelles license, and it has an FCA license. Like, oh, hang on, how many more licenses do you want? Do you want to be like, people complain about arbitrate, or their spreads are wide, and yeah, I have a pet peeve about the spreads, but you can attack the spreads, of course. You can attack, I don't like the platform. But you can't call a company a scam, because they would be out of business. And they're clearly not out of business. So there you go. And then that's not me promoting it, it's just saying, hang on, I trade with them and they treat me nice. It doesn't mean that I don't have disputes with them. I had a dispute with them 2 weeks ago where my platform froze, and I got my knickers in a twist over it. Turned out it was my fault. Sadly. Okay. Andreas from Australia, area code 62, must be Australia, isn't it? Or thereabouts, is it New Zealand? One of the two. Nice work this morning. Thank you, Andreas. You're always so nice to me, Andreas. You always compliment me, and when I do shit, you're always encouraging me. I'm really, really grateful. I actually think I met Andreas in, but here he is. So there you go. Thank you for the kind words. Have a restful weekend. It was a pleasure talking to you. But no, I won't be trading the CPI. But what you could do is you could use the rule of 4. Consider CPI. That's CPI. Rule of 4 on the 5-minute. Try it. Okay. Oh, then there's this lady that I love from South Africa. Her name is, well, I don't want to tell her name. Hi, Tom. Glad you're back. Noticed that you started trading the SPX yesterday. What is your thought behind that? Yes. So, well, I just spent a whole week together with the two Tims and Al and Rose. No, Rose, sorry. Actually, Rose wasn't there. My mistake, not Rose. Louis. And the Tims and Al, they trade S&P. And so there I was, muffling around in my Dow, and I'm thinking, should I begin to look at the S&P? I feel like the odd one out. And so I then did some research on the Dow and how it was trading Friday versus how the S&P was trading on Friday. And I gotta say, I would have had more luck and I made more money trading the S&P than the Dow. So I'm sort of just toying with adding new instruments. Johnny is saying, hey, your historic opening bar pattern recognition tool is very cool. Thank you. Does it simply search for bar positive? No, it has many other filters, Johnny, that I keep exploring and keep developing. So the situational analysis software that I've developed is also got an AI function to it. It's got training mode. Maybe one day I'll spend a bit more time talking about it. Right now I'm a little protective. Not because it's a commercial idea, but just because it's my idea. Firefly is saying, Q&A, Tom, a common situation for many aspiring traders is having a full-time job that prevents them from trading during key market hours, while that same job is usually their main source of starting capital. What's your realistic view on the overall feasibility of building a sustainable living from trading in that position today, especially starting with limited savings? You have got to appreciate the depth of this question. You really have to appreciate the depth of this question. So here's an individual, and it could be absolutely any individual saying, hey, I really would like to make trading my living. Is it even realistic? Well, why don't we try and tackle that question? What would I do if it was me today? Say we call route 1 versus route 2. Route 1. You save money to live on and to fund an account. Possible when young, possible when you have no family, children, etc. Yeah? That's the ideal route. You do this while there's time. You do this while there is when there's no commitments that prevent you from doing this, and then if it fails, you can say, okay, I spent 2 years doing this, I learned a lot about myself, I'm going back into employment. Will 2 years out of employment be a risk? Yes, of course it will. Highly depends on the barrier to entry. If you work in a job where there's little barrier to entry, then it's probably easy to find your way back into the job market. It would be a little bit akin to a woman becoming pregnant and deciding to stay home for the final trimester and then spending another year looking after the child before going back into employment. That's a year and a half out or so, but it's absolutely possible to pick up the career where you left off. If it's a higher entry, maybe professionally there is something that you need to update yourself with, but again, entirely possible. This is what I did. I took a chance by leaving JP Morgan, and then it sort of just fell into place from there. But that's probably not where most people are. I think where most people will probably be is route 2. You have responsibilities. You have family, children. what would Tom do? Well, first of all, I would make sure there was alignment. I wanted to go to my partner and say, hey, this is what I would really like to do. And I can see a future in it. And it stimulates me and it interests me. And it's the kind of thing that makes me want to work even harder than I do now. Can we talk about this? And the other side of the equation, the partner might say, okay, how is this going to work out? And so what I would do, I hope this is of use to you. What I would do, once there was alignment, I would study. I would not leave my job. I would save for an account. And of course, the way that I work, the way my mind works, is I was taught not to think short term. I was taught from quite an early age, and I'd quite like to give you an example of how I was taught. Because while I had a rather fragmented childhood, which is perhaps rather personal, but when you have a father and a mother that divorces and they decide to take each other to court to fight for custody battle, it's never a pretty thing. But one thing I do think that my father did really well, he taught me the value of money and how to manage money. And so while most children will get a pocket allowance once a week, my father would give me a pocket allowance once a year. And then he would say, son, now it's up to you to manage it. And I think in the first year, I blew it in the first month and a half. Damn, made sure I didn't make that mistake the second year. And so it taught me the value of savings. And throughout my entire life, I have been a prolific saver. You know that saying where, you save 10% of your income? When I was working at JP Morgan, I think I saved at least 50% of my net income. But anyway, that's just me, and that's not necessarily you. So let's get back to it. Let's talk practicality. I would study. What would I study? I would study my videos. I would study my entries. I would study my techniques. I would study Al Brooks's entries. I would study the Tim's entries. So yeah, you probably have to invest, say, $100 a month, and you probably have to buy some price action course books or video material. And then I would spend my evenings, I would create a plan. I'll put that up here. I would create a study plan as if you were going to night school, studying for, say, a diploma in, I can't spell today. I can spell, I can't type. Diploma in, I don't know, say, accountant. In short, I would create a plan of about 60 months. Slowly but gradually building up and create adaptation in your mind. That's what I would do. Because I think that if you are able to devote, say, 10 hours of real quality study a week, you will significantly improve your approach and understanding of trading. And then if you then coupled it with the mind work that I am perhaps known for, I think you will find that you can slowly but steadily move towards a place where you could make a residual income from trading, depending on what your work schedule is, from trading the US markets in the evening or wherever you have free time. That's what I would do. But you also have to remember there's not many people like me that has that real devotion to following what's in your heart. And when I did it, it was easier because I didn't have the responsibility that I had later in life. Okay. I hope, Firefly, that this perhaps, it might not answer every single question you had, but perhaps it would serve as a stepping stone for you creating the kind of plan that could work for you. Okay, I will do one more question. I'm simply just doing them. Okay, you're welcome. Firefly wrote, thanks for taking the time. It did help indeed. Thanks a lot. Of course, this question, this answer didn't discuss, well, what kind of reading plan would you recommend? And I think perhaps that would be the next step, would be, I think I can delete this because it is being recorded. What would have to happen next would be a study plan, an execution plan, and emphasis on regularity, so that you get into a rhythm that doesn't break. Habits are created through regularity. So there you go. All right, so the final question I'll answer, at least for today, that's from Jack. In FTSE, we have 7 negative bars now. Al Brooks would say to be in short, expecting a second leg down because of such strong downside momentum. Why not consider carrying a runner? Okay. For 2 reasons. One, we have a very significant known overnight low here, and we know historically that the FTSE tends to obey that. Another reason is that yesterday the FTSE had a very strong push lower, and it came off a high which was bar free, and I can show you bar free yesterday. Which came here. So here's bar free. 1, 2, 3. So here's bar free. And it was Beate that said, hey, I sold here the break of bar free. But if you look at bar free, you see that it has a range of, call it 14 points. If you then begin to count forward in sort of risk to reward, there's the 1-to-1. Meaning that if you sold short a break of 105.19 and a stop loss above the high, you want to get 14 points. So there's the first 14,000. That's a 1-to-1 risk to reward. And then you have 2-to-1 risk to reward. And so 3 times 14 is 42. And there's your free RR. And that's where we stopped yesterday. And while we could absolutely continue today, you'll see exactly the same pattern here. Bar free breaks. It has a range of 16. 3 times 16 is 48. So if you count down from break of 3, you'll see that the low is 48, a bit more than 48. It was 54, but you know, close enough. All right, so that's why I exited it. What happens from here onwards? Well, it's anybody's guess. But of course, I got a monster position going now. Okay, ladies and gentlemen, there's many more questions, and I'm gonna have to do them another time. And so you got me ended up streaming an hour and 45 minutes after all. I'll do one more. Okay, so Kesha is saying, Tom, mate, I have a question. Let's get rid of this. Tom, mate, I have a question. On a good run of winning trades, I'm struggling to carry on trading. On a good run of winning trades, I'm struggling to carry on trading. On a good run, I'm struggling to carry on. Why would you struggle to carry on when things are going well? All right, I'm going to read it in its entirety. On a good run of winning trades, I am struggling to carry on trading and really want to be more aggressive. Not in a sense to have bigger size, but to carry on trading. I get this feeling you have made your money so ease off. I really want to push and utilize the good run. How do you tackle this problem in your head? I kind of feel, don't give it back. Much appreciated for any input. Okay, that is a fucking brilliant question. You probably don't appreciate just how good a question this is. Oh, this is going to take a while. Shit. Don't actually have time for this, but it's such a good question. Let's start with the research. Research shows that 80% or more of the adult population becomes more risk averse when they are winning. Contrarily, they become more risk inviting, or shall we say embracing, when they are losing. And so the research was centered around giving a utility choice. And it's fascinating research, although its application is entirely up to you. But let's just lay out the research. So Keisha, I don't know if you're actually listening in. I hope, of course, that you are, because this is for you. Just going to type here, answering your question right now. Oh, you're here. Okay, then I won't have to type that. So Kisha, you say that you are from the UK. So say that I will give you £1,000 right here and now. So, hey, Kisha, here's £1,000, but I also give you the option of playing for either winning £2,000 on a flip of a coin versus winning, say, £500. I'm messing up with the statistics a little bit. So if you get a choice here, Kisha, I'm going to give you £1,000, £1,000 right here and then. But I will also give you the opportunity to not take the £1,000, but you can play me for getting £2,000 on a flip of a coin. But if you get it wrong, you only get 500. So there, research has shown that the majority of the population, the adult population giving this choice, would take the certain £1,000. I think if I said, if it's 10 quid, you probably wouldn't really give a hoot. And if it was, I'll give you £1,000,000, but you can play for 2 million quid, you might go, oh, Jesus, that's life changing. So I think the amount does matter in a research setting as well. But the majority would take the certain, in this case, certain £1,000. Just bear with me 1 second. So there you go. So the majority population would take the certain. However, if you now frame the question differently to say, hey, Kishore, you're going to have to pay me £1,000, but I'll let you play for it so that if we flip a coin and you get it right, you don't owe me anything. But if you get it wrong, you owe me £2,000. Now research has shown that when faced by constraints, we become more risk embracing or more risk inviting when we are, shall we say, losing. And we would rather take an uncertain bigger loss than a certain loss. Because, and I think what it probably boils down to is that the hope element comes into it, and hope dies last. But this doesn't really help you. That just tells you the research. Now it's going to get a little bit personal, Kesha, but I can't avoid that because otherwise I'm not able to truly help you. There is, judging from your text, your message, there is this nagging feeling on my part that perhaps you are making the money without really knowing why you made the money. And let me try and explain this to you. You go to work, or you go and sit down in front of the screen to trade the markets, and you walk away perhaps an hour later and you are £1,000 richer. But I suspect that perhaps there isn't the kind of consistency in your trading, your executed trades portfolio, to point to a pattern of consistency. And so that when you do make money, your mind, because of the random reward nature of your system, as opposed to being more consistent, you are perhaps quite relieved that you made money today. And as a result, your mind naturally is keen to hold on to that, because that's the nature of our minds. It wants to hold on to what we have gained. So if I just answered your question as a surface answer, I would say that one way of dealing with this would be to trade somewhat smaller size, so that when you are losing, it doesn't disturb your sense of mental equilibrium. But when you are winning, it's not necessarily making you want to swing from the fences shouting hallelujah either. But on a much deeper level, I would perhaps consider, if you needed to, like the person I answered previously, create somewhat of a study plan so that you attack trading with a greater intensity than perhaps you are doing currently. Because I think that our greatest strength is to know thyself, but you can really only know yourself It is the reason why review is such an important part of my training. Now, I know that many of you will have been with me for years, and I appreciate that I have my periods where I am really bad. And I pride myself from not hiding anything from you, because I think that through that integrity to the honesty, you also learn going, well, he's Thomas, human like the rest of us, and he will go through periods where things aren't really gelling for him. But when I go through these periods, I know I'm bad. I know, and that's probably that point in time where some well-meaning residents of the Telegram channel should reach out to me and saying, hey, why don't you take the rest of the week off, get some real proper sleep, and come back when you are feeling better, feeling refreshed. I can absolutely appreciate that you want to be more aggressive when you are winning. As you say, not necessarily trade bigger size, but to carry on trading. But there is another thing that you must remember, Keshaw, and I think that's what I will finish off with, is that you can only trade when the opportunity is there. So, looking at, for example, the DAX this morning, it doesn't matter how motivated you are. It doesn't matter how much in the mood and how well you slept and how well you ate and how well you interacted with your family and how good a mood you're in. If the market is in this kind of environment, you're like the surfer ready to surf big waves, but you got nothing but a 1 foot ripple. And so, interestingly, I was talking to a trading colleague over the weekend, also a very good friend, and I said to him, "Look, there are times when I am so charged up for trading, so charged that it's to my own detriment." And he said, "Well, what do you mean?" Well, for example, when I've slept well, if I've slept something like 9 to 10 hours after a really brutal exercise session, and I wake up and then I nourish myself well, that's usually the time when I feel, yeah, I am well rested, I have worked out, and I've fed my body really good food. I am in the zone. But then the market presents me with some bullshit trading range, and I'm basically just scrambling to try and make something of it, and It's not going very quickly either, so I get impatient and I'm over trading size-wise because I'm so fired up. But on the other hand, when the market then gives you an opportunity, not saying that this is it, but the market, see, this is the ideal world, isn't it? You saw me a little bit in the NASDAQ yesterday. I was fired up. I was really annoyed about my loss on Monday morning, and I was fired up to make it back. And that was an example of, well, the NASDAQ gave me the opportunity to do so, and I was 400 or 500% long. But Kesha, well, there you go. But Kesha, I absolutely respect that you want to, carry on trading. But unfortunately, you're trading a market that is not like a casino where there's an arbitrary, evenly distributed outcome on every spin. Here, we're talking about the market goes quiet. We're talking about the volumes are dropping. We're talking about the DAX being in a trading range right now. And even someone like me, and also many of you will say, yeah, that's probably not the best time to feel particularly motivated. I might be motivated, but the market isn't there. So part of your journey is probably also realizing there's nothing there. And then accepting it, saying it to yourself, hey, Keshav, mate, I am doing myself a favor by stepping away, not because I'm not motivated, but because the market opportunity just isn't there. Yeah? All right. Okay, ladies and gentlemen, I think you managed to get me to talk for 2 hours in the end, so shame on you. Okay. You're welcome, Kesha. I hope that it was of some guidance to you. And of course, I wish that I could clone myself and offer you one-to-one tuition, but it's really not what I do. I'm not a paid-for mentor. I'm a free mentor, and I enjoy trading, but I also enjoy the company that you give me. So that's it. Have a wonderful rest of your morning, and I will see you for the US session. If you do trade the CPI, then consider doing it using the rule of 4 on a 5 minute. Okay. Bye for now.